And now it's time for the morning trade. We're checking out Home Depot. The company reports its earnings tomorrow morning, and we have a preview for you. We welcome in Marley Kayden taking a look at this. Good morning, Marley.
Good morning, Nicole. Yes, Home Depot reports tomorrow morning. EPS is expected to increase 1% year over year to $4.71. As far as revenue goes, it's expected to come in for the second quarter at $45.51 billion. That would be up about 5% year over year and would be compared against a less than 1% increase from the prior year. So would be an improvement in their revenue growth. Home Depot has been facing a lot of challenges, obviously due to high interest rates, elevated home prices, the impact of macro pressures, tariffs, of course, on consumer spending. In the first quarter, they did see comparable store sales actually decline year over year. But for this quarter, analysts are thinking that Home Depot will report a more than 1% year over year increase in comparable store sales. Investors will be watching really closely for commentary on consumer demand, professional contractor activity, which is a huge driver at Home Depot, and the broader housing market, all of which could influence the sentiment moving forward about Home Depot. Now, on their Q1 call, Home Depot's head of merchandising said that spring and summer were to be, quote, what he called the Super Bowl season for home retail. That did not prove to be true, though, based on the data that we have, Nicole. We saw building materials and garden supply retailers see year over year sales drops in each month of at least 4% from May to July. That's from the National Retail Federation. We've seen retail sales overall in home improvement fall just about every month. We're continuing to see declining numbers in terms of the housing market. So it will be interesting to see how they pivot from that previous commentary, because all of the data that we have doesn't support that coming to fruition. High interest rates, of course, are keeping the housing turnover low, preventing a lot of Home Depot's primary customers, who are considered more affluent homeowners, from doing some of these home improvement projects that they normally would do, primarily kitchens and bathrooms. But relative to the competition, though, Home Depot and also Lowe's, who reports this week as well, are in decent shape. Analysts say that they are better poised to weather the storm than some of the smaller home and garden retailers like Ace Hardware or True Value or any of the mom and pop shops. So they are positioned in a slightly better way. Home Depot also sources more than half of its goods from within North America. So they are slightly more insulated when it comes to tariff impact. But they did say they are touting plans to further diversify their supply chain on the last quarter's calls, and also said that they would not raise prices because of tariffs. You just might simply see some items disappear from their shelves.
Yeah, understood. I mean, we know that the pros, the contractors, have often leaned toward the Home Depot versus Lowe's overall, but the tariffs, and this is something that we're going to watch for all these retailers. What about pricing? Are we going to see pricing now moving higher overall? But the housing market has had somewhat of a slowdown. So does Home Depot acknowledge the challenges, right?
It seems to me that they have acknowledged the challenges. I don't see any way in which they can't acknowledge the data that we already have. They are in a better place than Lowe's. Lowe's sources roughly about, I think, 20% of its products from China. So they are more insulated from potential tariff impact. But something interesting, Nicole, that I was noticing is because the home improvement giant is often seen as a bellwether for consumer spending in the housing sector, it is in 408 different ETFs. So we could potentially see a ripple through the markets when they report their earnings, because there is so much exposure in the ETF landscape.
Marley Kayden, thank you so much. It's great to see you. Good luck there at Home Depot. And we continue our coverage ahead of the company's earnings. And Mike Shorr, Director, Trader Education and Short-Term Options Instructor at Prosper Trading Academy, is with us. We see it at $395 and change today. What would you do here? An example trade for us, please.
Yeah. So, looking at the chart, I really don't see a whole heck of a lot. I mean, we have generally a bullish trade, but we've come back off of that. And then looking at the performance over the last 2 years on earnings for Home Depot, we've seen some up moves, we've seen some down moves, nothing too big. And so I'm going to take advantage of the elevated implied volatility that we see and look at an iron condor just for this week. So August 22nd, the 380, 385, 410, 415 iron condor, excuse me. And so we have $5 wide on each side. If we can sell that for $2.50, Well, we can lose $5. We're not going to lose $5 on either side. We can only lose it on one. And if we take in $2.50, then we can net make or lose $2.50. So even odds on that trade.
Understood. How do you feel about the market? Are you being more aggressive, or you feel like there's a lot of volatility this week?
It definitely has been a more summer type of just kind of sitting and waiting. Now we have a lot of things that can potentially move things. Of course, by the end of the week, we'll know what Powell's going to say and things like that. But it's been kind of slow and choppy trade with not a whole lot of direction, even though we are continuing to ratchet higher, but very, very slowly and very, very choppy in this type of trade, which is not atypical for this time of year.
Understood. All right, Mike Shorr, Prosper Trading Academy. Thank you so very much. Great to see you.